Manisha Gupta is joining us and has a guest as well. Manisha.
Thank you so much for that. Yes, we are joined by David Lennox, who's at Fat Profits. David, hi, thank you so much for joining us. And it is metals which is on radar today, because if you look at the overnight markets, the last 24 hours perhaps, we've seen many of these metals decline anywhere between 2 to 4%. I mean, we do understand that the economic scenario is not the best. There is debt ceiling conversation, and the US Fed meeting minutes clearly do not support as much as the street would have loved to. And then the strength in US dollar index as well. I'll start with each metal and the kind of sell-off that we've seen in copper, which is down 17% from the highs of 2023. What's your sense on this one going forward?
Look, when you have a look at the copper markets, we did see quite a good rally through the course of last year as the markets got wind of the fact that perhaps copper was going to be well and truly used and consumed into the auto electric vehicle market. So from that point of view, we had that very strong rally. We are now starting to see that pull back as the indicators that you've talked about are all starting to come into play. The real key factor at the moment is that US dollar, and with that US dollar, we're all watching what's happening with the debt ceiling. So that's going to impact across all of them. But copper did have that good run on the back of the electric vehicle news through 2022.
Oh, well, absolutely. But would you see further downside in copper from these levels? I mean, is it oversold on the charts? How are you reading the current price?
Look, certainly if you have a look at the charts, one would suspect that, yes, it probably is heading now towards that oversold territory. You've got to remember that the US dollar will still govern the downward side of that if it continues to rise. But if you have a look at the physical market, it does look as though we are now starting to see some more of a balance. The inventories remain critical in copper, and that would suggest to us that there's still some strength there in the underlying markets. We are aware that that sea change is coming. It is slowly building, and you can't really build a copper mine that quickly, so it will catch the market quite quickly, and that's why we're seeing the copper prices stay quite resilient. They haven't dropped completely away as we've perhaps seen in years gone by, so one would suggest that there is some pleasant undertones in that market.
Right. More undertones in copper. And what's your sense on zinc then? Because this one has seen a complete sell-off. 26-month lows. We've seen prices come 34% off its 2023 highs. And the kind of demand that we've seen for steel galvanizing also continues to be strong, continues to be weak rather, because steel is trading at a 6-month lows, iron ore at a 6-month lows as well. So would you say that zinc, even as oversold, I'm sure, doesn't really have too many buyers?
Oh, Manisha, look, you hit the nail right on the head there. Its key markets obviously are in the steel area, and we've seen weakness coming through out of China in terms of that particular commodity. So overall, one would suspect that we will see further weakness in the zinc market. It hasn't got that same future outlook as we see for copper, and that's really why when we did see the steel market start to move south, that zinc has fallen a lot further. So one would suspect that in the zinc market we may see a little further to the downside, because you really do have to wait and see if we can see a clear picture in the steel sector before we can see zinc bottoming out and then resuming to the upside.
And then aluminum, because, this one saw a lot of gain on the back of the fact that China wasn't producing so much, but those numbers clearly seem to be strong. And now Europe is back. The gas crisis is almost done with, and Europe also is producing a lot of aluminum. So aluminum within the metal sector has declined the least. But at these current levels, what's your sense?
Look, certainly we think that that particular commodity is going to stay quite firm. Yes, we have seen supply coming back on stream, and that put pressure on the price to the downside. But when you have a look at the consumption side, we still believe that there's considerable activity in that market for consuming, and we believe that with that we will see the aluminium prices, and probably aluminium as well, really start to perform towards the latter part of this year. Again, unfortunately, it will be the overriding US dollar that's going to play havoc with any rally if it itself continues to rally.
The dollar index itself, which is trading at 104, what's your sense on this, David? Because as you said, much would depend on how this index moves.
Yeah, look, we believe that the dollar index would probably have gone through the 100 to the downside by now, but obviously there are factors that are keeping it up. Of the debt talks, that's keeping US yields high. Every time we see those US yields rise against other currency yields, then we see the US dollar rise. We need to get the debt ceiling behind us, and with that we then need to see the market start to focus perhaps on the reason why they had to keep lifting that debt ceiling, and that may in due course start to see the US dollar ease back. If those interest rates do narrow, the US dollar is in for quite a significant fall. We believe it will certainly breach below 100, and that will bode good news for the broader commodity sector.
Clearly, that is some time away, as you said. But, you know, within the metals as well, I want to come back to that, David. If you had a stronger conviction and you wanted to go long in any of these metals, which one would you choose then?
Well, look, I think, Manisha, we've always gone for the nickel side of things. We believe that that longer-term outlook, we can't see a clearer picture in any other metal than nickel with a long-term outlook and what's happening in the auto industry. And, of course, that's probably the key at this stage. Yes, we will see that volatility as the news ebbs and flows out of the auto industry as to how the EV production lines are coming on stream. But at this point, you'd have to stick with nickel.
All right. And any pick that you have between gold and silver, David? Because we have seen profit taking in both of these precious metals as well.
Yeah, look, I guess gold, like the rest of the broader commodity sets, suffered poorly from what's happening with the US dollar, and that unfortunately will be the continual driver. If we see a resolution of the debt ceiling and those US yields start to settle, as we've talked about, then that will be, we think, a good start for the gold price to steady and then start looking back towards $2,000 as we see that US dollar weaken. It all does really depend on the US dollar for gold. Not much else is driving it at the moment, so we need to keep that eye open for that dollar.
Okay, all right, David, thank you so much for joining us with those insights. Thank you, Manisha, for taking us through that conversation. That's all about commodities.